What if I told you that $100,000 invested the right way could start paying you over $5,000 a year every single year in cold, hard cash dividends? And here's the best part. I'm going to walk you through the exact portfolio. I'm talking ticker symbols, exact percentages, current yields, and step-by-step math so you can see exactly how it works. By the end of this video, you'll have a complete blueprint you could literally set up today. If you're new here, I'm Dennis Chen, former hedge fund manager, CFA charter holder, and Wharton MBA. On this channel, we cut through the noise and help you build lasting wealth through smart, long-term strategies. Before we dive in, a quick but important disclaimer. This video is for educational and entertainment purposes only. It is not financial, investment, or tax advice. All tickers and examples are hypothetical and for illustration only. Investing involves risk, including possible loss of principal. Past performance does not guarantee future results. Your situation is unique. Always do your own research and consult a qualified financial professional before making any decisions. And if you want even more behind the scenes insight, join us in the Always Be Compounding Club, our private online community where we meet several times a month to talk investments, answer your questions, and keep you on track. By the way, coffee is on me. Twice a month, I host a live Q&A hour on Zoom. It's your chance to ask me anything about investing. Sign up for coffee with the Chief Compounder Space in our community and use the promo code ONEFREECOFFEE to claim your free pass. The link is in the description. All right, let's build this income machine. Segment 1, why this works. This works because we're blending different types of income producing assets. Some for stability, some for growth, and some for high yield. It's like putting together a championship sports team. You've got your reliable veterans, your solid role players, and a couple of big scorers to really put points on the board. The goal is simple: steady, repeatable income that you can count on while keeping risk in check. Segment 2, the hypothetical portfolio breakdown. I picked these because together they create a 4-cylinder income engine. Cylinder number 1, SCHD, your rock solid dividend growth stocks. Think of this as the reliable base of the portfolio. Cylinder 2, BND, bonds for stability and balance when the stock market gets choppy. Cylinder 3, PFFD, preferred shares, higher yields, less volatility than many high yield stocks. Cylinder 4, ADX, a closed-end fund with over 90 years of history and a juicy 7.7% yield. And then a splash of BNQ for real estate exposure, because rents don't stop because markets wobble. Bonus insight: some of these pay quarterly dividends like SCHD, BND, and VNQ, while others like PFFD and ADX pay monthly dividends. If you like the idea of having income hit your account every single month, that monthly payout piece is important for cash flow planning. Segment 3, the math. Let's crunch the numbers so you can see exactly how we get to that $5,000 mark. That's another $756. PFFD, $20,000 at 6.38%, $1,276. ADX, $20,000 at a very nice 7.74%. That's $1,548. And finally, VNQ, $5,000 at 3.9%. That's about $195. Add them all together, 1,341 plus 756 plus 1,276 plus 1,548 plus 195, and you get $5,116 in annual income. So not only did we hit our $5,000 goal, we overshot by a little bit. And that extra cushion is a nice margin of safety. Segment 4, how to implement this portfolio. If you want to set up something like this, here's the process. Step 1, open a brokerage account with a solid provider like Schwab, Vanguard, or Fidelity. Step 2, fund it. Doesn't matter if it's $10,000, $100,000, or $500,000. The percentages stay the same. Step 3, buy the positions in the exact proportions. Step 4, decide what to do with the dividends. Reinvest for growth or take them in cash for income. And here's where it gets exciting. If you reinvest those dividends instead of spending them, your income can snowball. Let's take a quick example. With a 5% yield and just a 5% annual dividend growth, your income could grow from $5,100 in year 1 to over $8,300 in 10 years. That's $8,300 per year without adding another dime. Segment 5, risk and real talk. Now let's be real. This isn't magic. There are risks. Interest rate risk. Bonds and preferreds can drop in value when interest rates rise. Market risk. Stock-based ETFs like SCHD and ADX can have down years. Dividend risk. Payouts can be cut if companies face trouble. That's why diversification matters and why you don't put all your eggs in one basket. Segment 6. Sustainability and monitoring. These funds have strong track records, but nothing is guaranteed. Review your portfolio at least once or twice a year to make sure it's still paying as expected and still fits your needs. Segment 7. Rebalancing guidelines. Rebalancing once a year keeps your allocations and your risk exactly where you want them. Segment 8. 4 guardrails for long-term successful investing. 1. Diversify. Never depend on one income source. 2. Don't chase unsafe yields. High yields often means high risk. 3. Stick to your process. The market will try to scare you out of good investments. Don't let it. And 4. Know your sell rules. Have a plan for when you'll exit an investment if fundamentals change. So there you have it. $100,000 structured to generate over $5,000 a year in passive income. Remember, this is not financial advice. It's an educational example to show you the process. Your results will vary. If you like this, imagine the deeper dives we do inside the Always Be Compounding Club. That's where we go behind the curtain, share portfolio updates, and answer your questions directly. The link is down below. And remember, the key to building wealth is to always be compounding. See you in the next video. Take care.